Okay, here's step 5. How to answer an exam standard question in 10 easy steps, step 5. What we now want to look at is the specific working for inflation. And if you remember, what I said is we need a separate working for inflation because we not only have multiple inflation rates for variable cost, fixed cost and sales, but we also have volume changing. This is my suggestion of how I would go about it. Here's my working, and the first thing I want to do is to simply inflate up the selling price and the variable cost per unit. That should be very straightforward. All we do is say, well, if you look at the selling price was $12 and the inflation rate was 3%, so we can add 3% each and every year. The variable cost was $7.8 in current price terms, and inflation rate was 4%. Again, we do the same thing, net one from the other, and we will get a contribution figure per unit. Then what we do is we include volume. By dealing with things per unit, we can inflate up easily. Now all we do is multiply up by the volume to get the total contribution. And then we deal with the fixed costs. If you remember, we had to inflate those up at 6%. And once we've inflated those up at 6%, then we can get our net cash flow, or what we tend to call the net trading revenue. If you wish, it is the net cash flows of all the operating cash flows, inflows and outflows, the day-to-day stuff. So, in summary, if you have both inflation and changing volume, you need a separate working. If, however, you have inflation but volume is a constant, I reckon you can do these workings in your calculator without doing a separate working on the page.